Let's look at it broadly here. Just how do you think the market's going to adapt to sort of this new political order now in China?
Oh, that's a broad question. Thank you, Yuan, David. Maybe we start with the FX side, since we were talking about that already. I think on that one, it's mostly been a year about dollar strengthening, don't fight the Fed. I think the PBOC is not going to do that either. I think the DXY is at 112, but the renminbi index is at 100. So I think it will be very natural for the renminbi to weaken a little bit, especially as the Fed raises rates again in November and December, 75 bips probably both times. So we don't see any difficulty, frankly, for the dollar renminbi to hit 740, even 750 actually in the next few months actually. So that's on the FX side. I think on the overall economy side, what's very interesting during the National People's Congress is that President Xi talked about economic development as well as national security. So balancing these two are going to really be the key over the next not only 5 years, but just even in the short term, because he reiterated his goal that he'd like China to get to be a mid-tier advanced countries per capita GDP by 2035, which is only 13 years away. In order to do that, we did some quick and dirty math. China is going to have to grow GDP by about 4.7 or 5% each of the next 13 years, and we're not anywhere near that right now. We're probably going to be under 3% this year. So therefore, China is going to have to focus on the industries that's going to, one, satisfy the common prosperity theme, but two, still be able to lift the overall GDP of the whole country.
Well, I mean, is it attainable in your view? I mean, short and long term. Short term is, do they have the money to do that? When you look at local governments, longer term, it doesn't seem when they're prioritizing security that you'll necessarily get that growth.
Really good question, actually. I think, do they have the money to do it? I think they do. They haven't really used too many bullets in terms of monetary and fiscal policy up until, I mean, surprisingly, for 2.5, almost 3 years of COVID, they haven't done that much stimulus, actually. But now they're going to need to, because the local governments are hurting a bit, actually. I think the local municipalities, provinces, they spend a lot of money on the COVID PCR tests every 2 or 3 days. The land sales, there's not as much land sales to bring in revenues. The business taxes are not as high as, revenues are not as high as before. So our estimates are that the local governments are going to have to raise 3 times as much financing in local government bonds next year to be able to stimulate the local economies. That's first. Now, secondly, can they do it in various industries over the medium term? They're going to have to do it with a slight handicap, because I think they want to develop things like technology, renewable energy, AI and semiconductors. But the U.S. has very clearly come out and said they're not going to support that. The U.S., for the first time really, is restricting human capital as well as the chips and the manufacturing equipment for the semiconductor industry. So China, in many ways, is going to have to deploy more resources into its own homegrown companies in order to develop these industries going forward.
You mentioned common prosperity, that's this goal, which seems to have been highlighted in all these speeches as well. Does that mean, what are the implications for that for markets? Does that mean that I should expect some sort of property inheritance tax?
Yeah.
And who does that benefit? The SOEs? I mean, how do you see it?
Yeah, I think that's, again, that's kind of the theme. How do you develop the economy but also have the common prosperity in place? I think we have to look for things that are in his speech, actually. He actually almost always does what he says he's going to do, actually.
True.
So he talks about the real economy, not the financial economy. So you would expect industries that benefit the broader population. So things like renewable energy, EV vehicles, batteries, they want to be the #1. China wants to be the #1 consumer and producer globally in this area. Or medical equipment, actually, hospitals. One thing that really came out during the COVID situation is that the hospitals in China are in the process of need to be modernized. So they're going to have much more medical equipment, things like CT scans, ventilators, things of that nature too. And that's a big investment for the country as well. But I think on the property side, I don't think we're going to be able to expect too much uplift in the bonds or equities of these property developers. And the reason is, I think it's almost going to become like a national utility, actually, that everybody deserves to have a house and that the housing prices shouldn't go out of whack too high. So what you'll probably see happen in the next stage is that the tycoons, the property tycoons, are probably going to be asked to pledge more assets against the debt they have outstanding. Then you're going to probably see the SOE banks support the property companies companies by giving them some money to finish the projects that are unfinished but paid for. That's what caused the mortgage ban before, the mortgage boycott before, and then finally probably SOE companies coming in to buy the weaker assets of the weaker property companies.
One last, I guess, question here on what happened over the weekend. I mean, the economic team, key officials are being shifted out come March. What do you make of that? And does it matter really who heads the central bank?
Hey, very good question. Yes, I think over the last 10 years, we had a team in place in China that the financial markets were comfortable with, people like Yi Gang or Liu He, people of this nature. But now, this team is being moved out. A new team will have to be rolled out. But I think the new team will be more used to implement the policies that are coming from the 7-person standing committee. So I think the policies will be very clear. This team has worked together in various ways in the past. So these are people that are well trusted to implement the policy. And then I think the economic team gets put in place to be kind of the technocratic implementers.